Welcome everyone to the Kendall Report. Sorry for the late start tonight. Had just about every problem I could have with equipment and rebooting. Just was a giant cluster tonight, so I apologize for getting the late start. But thanks for showing up. The room's still filling up, but I just want to do a couple things here. Make sure you subscribe, like these videos. You guys have been doing a really good job. It's free video, just hit a like. It makes me feel good. We're definitely printing over 1,000 likes every day, so that's encouraging. And make sure you subscribe. So before I get into tonight, I want to bring something up here and just talk to you about something that's going to be happening this weekend, okay? So I'm going to do a webinar on all of the Wavetech indicators at 1 p.m. Eastern time on Saturday. I was supposed to be putting my new computer together, but it got delayed. It's not going to get here to Tuesday because of, guess what? Supply chain issues. So they finally got it shipped out. But anyway, so I'm going to do a webinar. A lot of folks have been talking about how to use these things. A bunch of you have bought them. You might want to just get signed up so you can play along. But I'm going to do a very in-depth webinar on exactly how to use these things. And I think you'll find this really intriguing, and it's going to be live to the internet, so no special pass or anything like that. But it'd be a lot helpful if you can play along, and many of you will be able to do that. So we'll go through quite a bit of details. I'm going to go through every indicator, and we're going to talk about maybe some trade setups. I don't know where I'm going to go. It's going to be kind of an open source meeting. So make sure that you mark out some time. We've got a long weekend here in the US, so make sure you do that. So let's get into tonight's video and just talk a little bit. You know, when I was doing the broadcast last night, I was talking about, we could easily just go to a new low. Well, we did that. We traded into the 36 handle. And the title of tonight's show is, quadruple witching. Is this a recipe for disaster? And I don't know what kind of things could get out of hand here, but I think that the mood of the market is very skittish right now. We saw a lot better liquidity today in trading. Those of you in the live room were able to actually do some trades, get some things going there. But the bottom line is tomorrow's going to be a big day. I think we saw some of the unwinds today. That might be most of what we've seen. Looking at the market right now, we're actually printing up to 91. We printed down to around 68. We've been trading in a broad range here for a while, so we're really just looking at the markets just trying to move higher, trying to get back over that 37 handle. But let's face it, just coming into this week, we were wondering if we would even possibly see the 3808 level. Well, we traded all the way down. Yesterday, we printed down. We barely got an STX buy signal, but we traded down to the 42 levels, 36.42. So that was a pretty big number. We're 50 handles off of that. This volatility level, this doesn't really mean much. And I'll get into all the details here in a minute. Looking back on yesterday, I'm not sure anyone was looking at this, but we had the claims come out plus 229, continuing claims at 3.13. Both of those numbers were slightly up. The big numbers out there, though, is these housing numbers that are starting to come out. They're starting to look really, really ugly. And, we saw both housing starts and permits come in weaker than expected. There were still decent numbers out there, so it's not like they've halted and they're negative. That's not the case. But they are starting to see some pulling back. And it's going to be interesting, I guess, from the standpoint of what's going to happen with pricing in the real estate market, a whole lot of other things. So my eyes firmly on this right now, just trying to get a handle on what's going to happen. Is it, one of the things I do want to talk to you about tonight is that there's just this thing, everybody, if you look at the news line, you see many economists, analysts looking at 2023 as a recession. And most likely, no matter where you are, you already feel like we're in a recession. And I believe we probably already are. That by the time that the technical numbers get the lag, the way some of these numbers are calculated, they're going to go, well, we're not in a recession, but we will be, and we are. So that's going to be a thing. It's just like if you think back, we were talking about the going back to the transitory, then it was, and I was in the camp, it's not transitory. I think that inflation's got probably another round. I think we're likely to stay at least flatten off at a 9% rate for multiple months. And when it does come down, I don't see it coming down a lot. It really depends on if these markets start to come in a little more, we start to see folks really pulling back, then we'll start to maybe see it's moderating. But the problem is we're going to be in a full-out recession. And I don't think this, and I'm just going to say this, I'm in the camp that this is not a mild situation coming. I've been talking to you folks about this. This is a major event. I'm in with Jamie Dimon and a bunch of them that are talking about this is a big event coming. If you can't see the big event coming, I don't, I mean, it's impossible. It's like seeing a wall. I lived in Phoenix area for many years, and we used to get these sandstorms, and you see this wall, this sandstorm coming at you. You can see them for 15 miles, and they're just a wall coming at you. To me, that's what I'm seeing here in the economy. And I've been talking about the economy stalling for what, maybe going back into fourth quarter of last year. We continue to kind of grind things through this year. So we're finally getting that point where things are really starting to halt. We're going to probably see contraction, consumer credit. You can just go across the board. So by the time everyone figures out that we're in a recession, we'll be it'll be well underway. Excuse me 1 second, please. So basically, I guess what I'm telling you is be prepared. Make sure you get lots of things tucked away for the winter. I think we're going to see some really bizarre situations, and I still am expecting kind of an echo wave from the COVID shutdown in China for the supply chains. We talked about early in the week, if you look back just on this week, talked about the DEF situation with the distillate fuels, ethanol issues. It just goes on and on and on with the fuel sources, in spite of the type of, I guess, rhetoric you're getting out of the White House, that it's all, it's always blame someone else. It's the energy companies aren't producing, just produce more, and I think I saw it was CEO of Exxon, I think, said that he doesn't think there'll be a new refinery built ever again. And so that's quite the statement. And, we're going to get rid of fossil fuels, and it's not possible, not in this century anyway. And we'll say in this decade or beyond, the next 2 or 3 decades, I would say, you're going to be seeing fossil fuels. Somebody will probably come up with a brilliant idea on how to get 150 miles out of a gallon of gas or something, and then you don't even need electric. So anyway, just be aware that as we come into Friday's market, we're got a long weekend that we're going to be dealing with. We got quadruple witching. All this stuff is going to be set up. So possibly on Saturday morning, if you show up at the webinar, we'll probably start with, while the room's filling up, we'll start with some market analysis. So let's get into today's video, and it shouldn't take too long to get through here. I'm just expecting that we will see some further downside. We've been seeing these little rallies. You get up just over the even handle. We're trading 36.91 right now on the S&P futures. We get up over like 37.08 or something. They're just getting rejected out of here. So let's get into the database. So here's the numbers for tonight. We're down. Last night we were at 17.20. We're now at 12.59. This is what I refer to as full liquidation mode. We have 1,665 sell signals, 116 buys. Everything's getting liquidated again. It's interesting. I was thinking about something earlier. We've seen a couple things here in the database. We saw a false start. We got about 42, 45% bullish. We went full liquidation again. We got up into the 60 handle, 68 on this most recent kind of rally. It looked like we were going to get some serious traction. I was talking about maybe getting to the 43 handle on the S&P, and all of a sudden we get rejected off of this, basically the 10-week moving average at 42.15. We never got through it. I was warning you folks, watch that 42.15. That's your trigger point. We got a huge rejection when I was out of town, of course. And then here we are all of a sudden from that level, and we're printing 36 handle, 36.40 handle earlier today. So it's been quite ugly decline, and it doesn't appear that we're done yet. I think and I'll go through the details here. I was talking about this in the live room today, that there's a chance about another 100 points on the S&P and the 35 handle. I'll lay that out, 35.50. I'll go through those details. That's where we'll probably see the next potential for a bottom to set up, and we'll just see what kind of configuration we get. And maybe the third time will be the charm, and we'll get some sustainable rally, and I'll go through the details here. As far as Friday coming in, this is Friday coming in, so we have the intermediate models are running. With this kind of week, we're not going to get any traction. We'll probably lose some traction. We're at 10% on the weekly basis right now. If I put this over on the weekly models right now, we're looking at 10.36. It'll probably be less. The extremes that I've seen, just to give you some context, is in 2008 we got down to into the 6 handle, 6% of the stock. So basically out of 100, that means about 6 symbols out of 100 were long, had some sort of uptrend. And so there's not everything was down, but there weren't very many. 10% of this database is what, 1,600 or so. So we're looking right now 1674. So we're looking at maybe down around 1,200 symbols being long. And also in 2008, the S&P, I think we got down to the S&P only having about, if I recall, it was about 8. I usually don't go in here. I'll just leave this on this screen here. Let's see if I have, I don't have it up here. Just take me a second to put this up real quick here. Bear with me. We'll just put this up very quickly. What I want to show you is just how many stocks. I've got the S&P 500 I'm bringing up right now. Right now, out of the S&P, there's only 98 symbols long. I wouldn't be surprised to see that get liquidated. If we look at the open positions, let's see if any of them are making any money right now. Yeah, there's actually there's a fair amount. There's some red and green on the symbol out of the 100. But for the most part, I'm willing to bet that probably the green are here it is, Archer Daniels, so commodities and probably some energy stocks that are in there. But I show you that just to show you how few stocks are actually in any type of trending mode when we start to look at the big scheme and start to look at the database. So I want to set us up for a long weekend to look just what to expect. I expect to see probably some more liquidation here on some of these. Like I said, there's some green and red here for the symbols that are long, but here's Phillips. Like I said, it's going to be Pioneer Natural Resources up 43%. So those are the kind of trades that are going to be in there that are still working some of the energy stocks that are in there. All right, so let's get into the S&P for tonight. We're up 1825, printed so far. The high's been 94.75, and we're looking at the moment from the standpoint of the market grid. Let me bring that up for you so you can see that. So looking at the market grid for the S&P tomorrow, so far we printed 94. R1 is 3703. This is basically what I was talking about a minute ago. We've been printing just over the handle. After taking out 3808 the other day, we printed down into 37 handle. We actually printed 3708, rallied all the way back to 38, roughly 3808, maybe. Actually, we got up to 3830, and then we plummeted all the way down, and now we printed into the 36 handle, and we're still 3689. So the range for today, 3639 S1 would be a retest of yesterday's low. S2, 3600. All of a sudden, with this huge volatility, S2 is 3602. We get through that, we're looking at 3566, and I'll show you where some of these target numbers that I was talking about a minute ago come into play. So let's go to the weekly. So weekly, we're trading at STX is 3666, and we had a low of 3642. It's possible we could get a close under that STX on a weekly, maybe get a sideways signal. But look at the PPMs. They're just huge acceleration, minus 1.22, minus 0.77, and minus 0.42. They're stabilizing, but they're stabilizing in trend level. And that's basically a trend maintenance mode. So all of these, we're looking at 40, 68. Right now, we're dropping 80 handles per week. So that's going to be mid 39 handle. So just in a 2 weeks time, we're going to be 180 points lower, roughly, estimating this. So we're going to be into the 38 handle all of a sudden on the 10-week moving average. So rallies are probably, if we got had any rally at all, recovery rally, that would be probably around that 38 handle. I'll be able to fine tune that once we get there. I don't know that that's going to happen. We could print down all the way to, and this is the number it's going to show you, 34.49 is the 200-week moving average. I went through a lot of the 200-week stuff a couple nights ago, maybe even covered a little bit last night, but we're looking like that's going to be a pretty good number. But I'm going all the way out to the monthly numbers here, and the 40-month moving average, 35.77. This is where I think is going to represent some sort of support. I think it could be major support. I won't go through the details I did in the live room today, but I just will bring up a couple of things. This happens a lot on some of these configurations. What we get on these configurations is you'll have the short term, PPM 1 will be negative and PPM 2 and 3 will be positive. And what that sets up, I'll go back full screen here in a minute. What that sets up is that we usually get sandwiched between the 40 and the 21 week moving average. That's going to be the trading range. And one of the things I set up as we come in, we're mid-month, as we come into that 628 number, that's actually the next. It's interesting that day, I talked about this 45.30. It's not even in play anymore. That's almost 900 points. We're going to get a quarterly confirmation of the outside bar that started in the first quarter. Second quarter is going to confirm that. The fact that it confirms that, I actually am expecting for a potential of a positive third quarter. So if we had TradingView up here and we were looking at the quarter, what I would be expecting to see is that we get like just having red bars being negative and the green bars positive. We'd probably get a green bar in the next quarter. Doesn't mean it would be up a lot. I'll be able to estimate that. We still have a couple of weeks left here, but we're going to get confirmation on the quarterly reversal. If you recall, this whole scenario, and I'll go through that one in detail as we get close to the D date of that, where we get to the deadline of that 628 number. When we get there, I'll show you exactly. I'll just mention it real quick, but we had a monthly reversal where we made a new high in January, closed lower and took out the previous month's low, the December of 21 low. And then we got a confirmation the next month, which led us to a quarterly reversal, which now we're getting a follow through on the second quarter. So this is the potential for setting up probably 4 to 6 quarters of basically negative numbers. Like I said, I think that the third quarter could have some recovery. We'll see. Maybe it won't be summertime blues. We'll have a little more of a rally coming into July and August and into September, maybe setting up a high in October with another fall down. Remember, we've got the midterm coming up here pretty soon. We'll see how that gets perceived and what kind of sentiment builds around that. It's a little too early to call that. But the bottom line is we should see somewhere between the lows that we had today at 42 with all the way down to 35.50 should be a range to watch. But if you set up this scenario I just talked about, so we have negative 10, the 21 is positive. So the range of expectation here would be roughly 35.77 to 41.30, just round numbers. So we could see lots of volatility. If we get that kind of range, we should have a really nice tradable rally just to recover we'll see how it all pans out. But this is one of the things that I'm anticipating here. And the same pattern, for the most part, will be prominent in the Nasdaq and in the Russel as I go through those. I'll just start with the Nasdaq here. This is still monthly, so it's interesting that the monthly has much different configuration from a strength standpoint. The Nasdaq is way weaker. We're trading below the 40 week already. The 40 is up at 0.89, so that tells me that there's pretty good chances we come into the end of the month that we'll finish above that number, which right now, let me get that on the screen, is 11,450. That's not a big deal. That's a little bit of a recovery rally from here, but this next couple of weeks will set this tone up. I'll be watching that as we go through, but PPMs are off the map bearish here on the PPM 1. PPM 2 is starting to accelerate down, and these all move a lot slower because each bar is a month. So I'll just continue to tail this as we go through here. So we'll just do a quick top down since we got a long weekend here. We're almost at the STX number, 10,988. The low is 11,068 on the week. So we're just about into STX here. We're also got the 200-week moving average here, which is sitting here at 10,811. And that's probably something that's going to hold. You're seeing the PPM 2 trying to turn up, but these are big downtrend numbers. All you would expect here is to get up to the 10 and get a rejection. So right now the 10 is dropping roughly 300 points per week. So that'll be 12,002. So that'd be a 1,000-point run here on the S&P, which is not that big of a move. And we would look at the scenario of seeing a rejection and then maybe a retest of whatever the low is in this current configuration. So we still have a ways to go to get through this. There's nothing that really says we've got a low here at all. We're going to have to let prices lead us from that standpoint. Yeah, so overall though, these markets are going to probably catch your breath. It would be awful easy just to predict that they're going to go down. They may just full out collapse, but there's going to be something else that we don't know about right now. From the standpoint, if I were to go out here and I put a strategy on here, let me just real quick. Let me just turn on the. I'm going to turn the shorts on and you'll see something here. So you can see what the models are doing here. But the Nasdaq model is short at 15,837 on 12/24 of last year. So we've been short the Nasdaq since 12/24 here. And here we are pressing this 200. So this has already been a pretty elongated situation. We were long. We flipped the trade here. So we went from, you can see over here, we had a purchase 15.9, and then we covered it at 15,837, lost a little bit, got short for a big trade. So this trade has been running for a while. Let's go over to the daily, just leaving this model on. So yeah, so this was a big whipsaw on a short term, but the patterns that we've been talking about on the models and everything have really been in a position. And actually, this model probably isn't the optimized model for this, but we're just seeing this big rollover. And if you look at the PPMs here, I'm now down on the daily level here. You'll see that we've got the PPM's trying to turn up. PPM 3 is trying to turn up. Looked like we had a bubble bottom. We got a reversal right off the 10. This is daily. That 10-period moving average is going to continue 11,888, which is declining. And this is valid, being recalculated real time. So it's dropping. I'm just seeing what the drop is per day, roughly 120 per day. So that's going to come in as resistance as we come into early next week. So don't see any buys here. If you're short, you can probably play it out a little bit more. This is just the patterns that are unfolding here from that standpoint. Russell's next. We got big time STX buy signal. Let me put the RTX up here. So we have the futures. Got an RTX buy signal. We're up 0.61 right now on the Russell. But remember, it was down 4.7% yesterday. So this is nothing on the scale of things. Nasdaq was down 408 and S&P down 3.25. So while these you're seeing some stability in these PPMs, it doesn't mean there's going to be a rally, but we're probably going to sit here on the range for coming in probably a high so far 1663, R1 1669, so maybe R2 could get a big range, R2, S2 with everything that's probably going to be going on tomorrow. Okay. Next market is the 10-year. We saw a huge reversal yesterday on the 10-year. It's very interesting. And all of a sudden, I'm going to show you in a minute, the yield curve is not inverted anymore. We've already wiped out a 16 basis point inversion. And it's kind of interesting if you watch around, and I'm just warning you guys, getting pretty bearish here. Some of the comments I'm seeing on the channel here, but the bottom line is, looks like we're going to head back to about 320, 316. That's going to be the number, the old target number that we had. If you recall, that we had that cycle high come in 3 days ago at the high. The high was printing there at 348.3, 3.48, and we've been down ever since. And definitely looks like we're going to come back into these moving averages. PPMs are super bullish. The 10-period moving average is at 317. Let me just see what that's doing. About 3 ticks a day. So that's going to be 320, 324 is going to be any extremes for this market. Let's go to the weekly. And the 10-year, it spiked way above. Definitely got extended here. The 10-year is 2.9. The 10-year 10-period moving average is at 2.96. And so that's rising roughly about 6 ticks. So it's going to be right at 3%. That's going to be major support. I don't think we get down much below the 316 level, at least at the moment. But we're looking at the PPMs actually starting to fail a little bit on PPM1, though it's very positive, 2.05, 3.05. And if you're new to the channel, anything over 0.25 is a uptrend. So we're talking about 2.05. So you got a whole integer here in the front end of this thing. So this is really a big move. And we're also getting into that rising 10 pattern in the market grid here. So that's going to be a dominant pattern here as we go forward. Let's take a quick look at the yield curve. So here's the yield curve. We finished, actually we're still negative. I take that back, minus 0.15. But the 1030s are back positive, and we're still negative on the 13-week T-bill versus the 5. But this 530, which is my favorite indicator here, let's just make sure we got this. Yeah, so you can see what's going on here. I think that we basically stay in a range here. We went down to a negative 12.5 so far. on a closing basis, we haven't printed down that level. On a daily, we have. This is a weekly chart, so you can see this huge decline and flattening of the yield curve. Just to talk a little bit about this, for the banking system, for there to be lending in the economy, you need a positive yield curve. And there's no way that I can see right now that the Fed can actually get the yield curve to invert. And it'll be even more interesting. I think we've got a little bit of a pause in the Japanese yen scenario I've been talking about. I'm going to bring that up next here. I believe I have it already on screen. Yeah, I do. So I'll just bring that up right now, put it on screen here. But the yen is up right now about 1%. It traded down to 131. We're back at 133. Talked about this last night. 132 probably going to be the number to watch. We go back out over 134. That's going to already show you that the Japanese, the BOJ is not having a lot of success in controlling the yen at this point in time. I think supposedly they wanted to keep rates negative, but they're having a little trouble with that. We'll see how committed they are to making this happen. But this is still a major event here. This is the daily. If we go over the weekly chart, you'll see that. Let me go full screen. On a weekly basis, we've got a bit of maybe hesitation here, but the 10-week moving average is rising. PPMs have faltered a little bit. We're 0.70, 0.76 on these numbers. And when you go to monthly, then you really start to see this massive acceleration. So while we could see a bit of a hesitation here, it's a long ways. This trend has a lot of power behind it. And I've talked about this before. 142, $149 yen is what I'm looking for. If we get above 142, then you're talking pretty much a disaster. And all of a sudden, we're probably going to see treasuries and a whole lot of other things start to move. So this market's no way near. So I'm not trying to, by any means, say I'm not bullish here on the equity markets, but I do think we're close to at least a point where we can get a bounce trade, maybe 100 lower than where we are in the S&P, 35.50, somewhere between 36, 35.50, and then you're just looking at that range that I set up on the monthly. So just keep in mind those numbers as you're thinking about this. But this is still a major event. It's not by any means, because it backed off from 135.5 back to 131. That's not the end of this. This trend is still very, very alive and very active, and is going to continue to unfold over the next couple months. So we're starting with the weekly crude oil. We're back at 114. We actually printed yesterday up to this is the week, I'm sorry, the weekly. We've been as high as 120, 146. The low's been 110. I think we remain above this 107. I talked about this number last night, 107, 110, and probably 117 on the upside. We should see further consolidation here from the standpoint of the trends that are here. PPMs just across the board bullish here on the weekly, and we're at least going to maintain that 107 level if there is any softness here. Let's go over to the daily, and the daily is just basically neutral. There's a slight upward bias here. The 21 is at 114.18. Right where we're trading now is right into support. Possibly if we could close over 117, that would be positive coming into next week. But it looks to me that we're starting to fade a little bit on the PPM. So some sideways, maybe the possibility of getting down to 108, 107, which was the number I just discussed. So just when you want to count gold out, you get a big rally. You get a pretty big rally yesterday. We traded back to 1860. We closed at 1849, back at 1850. So this has been the same pattern, folks, that we've been in for a while. Is just waffling along. It kind of reminds me of how the Russel was before it broke down. I'm going to go over to the weekly because that's pretty much the only trends. If you're going to, we're just seeing that broadening range. So we traded down as low as 1806. Minimum 1857. That would be a decent close just to maintain a sideways range. Nothing new here. PPMs are all negative. Trend is down right now. The rejection point is 1882. That number is coming down right now about $10. So 72 is going to be the mark for watch for a rejection as we come into next week. So keep that number in mind. Okay, final market to cover is Bitcoin. We are trading below the 200-day. This particular chart closes out on Sunday night. So those of you that have the indicators, you'll be able to do that and have that new projections and everything that's going to come out. Right now, there's no downward projection, but the close under this level, if we finish on Sunday night below 20,000, the actual number is 22,348. So we close under that, we're likely to see at least another week and a possibility of a couple more weeks of negative numbers here. And we could be looking easily at around 12 to 9K on this market. It's starting to look pretty ugly. You've got some pretty major downward pressure. What's been happening over the past several weeks, we did 4 or 5 weeks. I talked about the stability, and then we just got this selling. I think everybody that was out there in this market was rotating from whatever coins they had into Bitcoin, and I think that was the stability after the collapse of all of the stable coins and all that big debacle happened. Now they're not getting any traction, and people are nervous after what they just went through. So market sentiment is pretty negative, and especially with the backdrop with the Nasdaq doing what it's doing. So if you look here right now, I mean, the Nasdaq and Bitcoin have been somewhat correlated, and we're up 0.74 on the Nasdaq right now, and Bitcoin's underwater, $1,400. So they're not really getting any traction at all on that. So just real quick, that's going to do the broadcast for tonight. Once again, if you just joined late, I'm doing a webinar on Saturday at 1 p.m. Eastern time. It's going to be on the indicators. I'm going to go through all the indicators, how to use them, what basically a whole history. It's going to be a couple hours plus at least, I would think. So I'm going to do full seminar. You can get the link at the top here, get signed up. It'd be handy to have them to go along. You can just join and maybe go after the fact, but I'm going to go through a lot of details. We had some pretty decent setups intraday today, so hopefully we'll go through, like I said, all the details. Here is the setup here for it. So it'd be Wavetech webinar, Saturday, June 18th, 1 p.m. Eastern time, 2 hours plus, and I'll do Q&A at the end, the whole bit. So I think that's going to help a lot of folks, because feedback that we've been getting is folks want a deeper training. So I'm just decided, I was supposed to be putting my brand new computer together, and the result is that the computer got held up because of supply chain. Everybody uses that excuse, right? It was supposed to be here yesterday, and I got notified that it wasn't going to be here till next Tuesday, which is a real shame, because I was going to have this nice long weekend to put everything together. It's going to be a big deal tearing down. I'm taking this environment, I'm moving it over here, and it's going to be a whole dedicated. So I'll have 8 monitors here. So when I get all done here, so it's definitely a big upgrade. I used to have 12 monitors. I went down to 2. Now I'm going to back to 10. So anyway, hopefully we'll see you there on Saturday. So mark your calendar. Hopefully that works out for a lot of folks. That's Saturday evening for those of you in UK and Europe. That probably work out fairly good if you're just hanging out. So anyway, folks, thanks for watching. It was an awesome week. It was nice to be back. And so, like I said, see you on Saturday, and maybe we'll do a little bit of market stuff while the room's filling up for that webinar. Anyway, have a great weekend, and see you Saturday. If you're not there, we'll see you next week. The next video then will be Monday night instead of Sunday. All right, folks, have a great weekend. Yes, it will be on YouTube. There's the link to the indicators, folks. Thanks again. See you Saturday. Make sure you hit that like button before you leave.